Hello, everyone. Can you hear me? Obviously, you can. And this is Ying. I am here bring to you a 3 p.m. webinar that we always do on Saturdays. The reality is, the reality is that if I am anywhere with internet, Saturday 3 p.m. will not stop. And you notice that my friend, because I am in my Minnesota Bloomington office. So this is my office here, and I am giving you the seminar from here. Today we are talking about still have time to save taxes. Can you believe that? 15, we are talking about still have time to save taxes. Yes, absolutely right. Let me tell you how we can get there. Before we get on to show you what we prepared for you, let's look at our website and also Community CPA's YouTube channel. The reason we want to show you this because just in case you forgot where is your forever place you can come and you literally can go to appointment and just find out my calendar. You know, obviously I am beating my own drum and saying that you come to me and we have other partners right here so you can consult with them as well. You can click me, see my calendar, book my time. Obviously these are paid consultation, but of course we promise you that we deliver the result. That is a promise you get from me and all my partners. And the Community CPA channel under YouTube is a treasure box. And you can see so many videos here and you can search for what you want to know. So if you happen to heard of things like mark to market, what is that? Then you can go on mark to market and you can find all of our mark to market webinars. So this is where you can learn things, especially if you know me and if you know Community CPA. When you listen to our webinar, you just kind of feel like you are in our office, and it really doesn't bring you, it's not the same as you just go on a website and found some dude talking and you don't know that person. You know us. We are actually on the market serving the public for so long, and we have a long history. We have more than 10,000 clients. So you can imagine we really do know what we are doing. So come on board, and this is the right time to come on board. So I want to make sure that you know where to find us. Now let's go into our today's scheduled event. I want to give you a summary of what you can do right now till December 31st, 2023 to save your taxes. Okay. Everything we tell you about here, it is something you can do right now. If it is not something you can do right now, I would not bring that to this webinar. And before we go on, let me introduce myself because some of you are new. In fact, we always have new people coming to our webinar. So we are a firm here for more than 25 years. Yes, more than 25 years. And we started from zero all the way to today. And the one thing we promise you will grow with our reputation. People know us all over the country, so they come to us. We grow organically. So we're not those big merger acquisition firms. No, we are really just go by what our reputation drive us to. If we have a lot of clients in Minnesota, we set up Minnesota branch. If we have a lot of clients coming from Texas, California, that's why we are setting up California branch and Texas. So we go with our client. And we collectively, we in this firm, we have about 40 professional staff. We don't have part-timers and we are all full-time. Once we're on, we are on. Our body and the soul is committed. So we only have full-time staff. All of our people is here in United States of America. So we don't outsource. If we think of outsourcing, we think of IT advancement. If I really need some no-brainers to do the work, then I need a computer to do the work, right? So we don't do outsource. That's not our game. And we're all in here in US, we have more than 10,000 clients, speak more than 10 languages here in our firm collectively. And I am the CEO and the managing partner. So yes, I have a lot of knowledges, but yes, my extension of knowledges is coming from other partners, other staff. We as a team will serve you, and we do really good job. I have served on the Federal Advisory Committee to IRS for 3 years. So just want to brag about it because that is my credential. That is how far I go professionally. And in our firm, our largest client is $250 million a year revenue, and our smallest client can be someone that who just started the business with zero revenue. So does that give you a good map of what we do? We do serve small, medium-sized businesses. You can count on us. And you can go to communitycpa.com, that our website, to look us up. And here I want to tell you that I have published 2 books in the past. The appointment with Ying at 8 a.m. That one I published in 2019 is all about how to start up a business. And then 23 this year, early spring, I finished Appointment with Ying at 10 a.m., published in the summer. So now these 2 books are on Amazon. This book is about growing your business. So we just simply tell you after you start what you do to grow it. So I am writing the 2 p.m. book. That should come, I'm budgeting for 2 years. Normally it takes 2 years to get it done. And then I have a 4th book which is the 6 p.m. So both books add into this first 2. It will make a 4 books for a business life. Like if you have a business, your business starts and it grows, it expands, then it retires. So it's give you the whole lifespan of your business, and which we write about our client, we write about ourselves. I give you my personal stories, how to grow community CPA, and what staff are like, and what kind of difficulties I face. And this second book has a lot about COVID time, because that was the time when I wrote this book, and the COVID was just there. So I had a lot of content related to that. And with that, I want to say that the webinar itself is free, so no responsibility disclaimers. That means I say I don't take responsibility. Isn't that crazy? I have done so much research and I have so much experience. Of course, I will tell you what I believe is correct, but that doesn't mean it fit your situation. So no responsibility is just a little nudge on you saying that, hey, it is time to professionally engage us instead of just getting the free educations everywhere that may not fit you. Let's talk real stuff now. So 15 days left. 15 days left before December 31st, 2023. Isn't that true? So we have 15 days. What can you do? What can you do, Ying, to save my taxes? I know that's what you're gonna ask me. And let me tell you what I recommend you to do. And this slide is pretty much the one I want you to focus on. Let's think about your income. Of course, I assume you're a small business owner, you made money, and you have a big tax bill to pay, because you already know last year you made some money, you already paid a lot, and this year you made even more. You're like panic. Okay, Ying, I am like cannot pay these taxes. Last year already killed me. I still owe IRS. Now this year I made more, and imagine what am I going to do? I might as well just IRS's housekeeper clean their house for a living because I can't afford my tax bill. Yes, I understand. So I am talking about how to try to figure out what is your taxes you need to pay. Is there any legitimate ways we can reduce that? So number one, I want you to think about your income. You may say that what to think about, I got my credit card income and my cash income. What do you want me to think? You want me to hide my cash income? And I want you to report all of your income. But the income that you report has a lot to do with your accounting method. I know a lot of people will say that, Ying, why is tax has anything to do with accounting? It has so much to do with accounting. Only if still the person saying that, well, tax has nothing to do with accounting. You know what? You are actually talking about business knowledge. If you are the one saying accounting has nothing to do with taxes, you are in kindergarten. You need to raise yourself up to elementary school, okay? Business owners, come on, we need to know there's a cash method, accrual method. That's elementary. If you want to be a college graduate for business side of knowledge, you need to know exactly why you are in cash method, why you are in accrual method. Every business is different. To follow what your neighbors is doing, and you need to decide what accounting method you want to be. So let me just give you the real nutshell, real things for this accounting method. If you are running a restaurant, you know the customer comes in, you have income. So whatever got deposited into your bank, that's your income. But you paid a lot of purchase at the end of the year, and you only pay your suppliers 30 days out. So in December, you bought $15,000 supplies that did not really, you are already using it, not pay for it, because you can pay them in January. In your scenario, in this scenario I was talking about, which is almost every restaurant scenario, you should be in accrual accounting, because so you can accrue your expenses in January that you paid over to December, because you already use the material, you just have a payable to pay. Accrual method accounting would allow you to deduct the expenses right now, so you can reduce 2023 taxable income by taking in expenses that hasn't really gone out of your bank account yet. But if you're in cash, you lost it. In cash, you did not pay for it yet. So when you look at your bank statement, you didn't have that expense going out. It will go out in January, but you can't deduct it right now. So what happened to your December income? You made money on the material that you haven't even paid yet. So you're going to pay taxes on the full income because you don't have anything to deduct. So for a restaurant, and now I want you to think about your income, to think about how you can replace it with this accounting method difference. So you may say that 1 hour is too late, I cannot do method change. You can, so you still have time. So that is what I'm trying to tell you about accounting method. And on the income, you also have something what we call unearned income. It's very popular. It is very normal in construction company or driven company. For example, if you are running a training program, you're running a training program in December, you are advertising to your student, oh, pay your 2024 tuition, then I will be 10% discount. So everybody comes or paid you money for 2024 training. That is your unearned income. It is in reality a liability. If you happen to close the shop in 2024, you money back to your people, don't you? So if that is the case, that means you didn't earn it. It is not amount out of the income you are going to give to your tax preparer. You did not make that income yet. You are making it in the next year. So if you are in that kind of business, you know you have unearned revenue. And in construction company, by the end of the year, you got a house owner wanting to renovate their house and you quoted for $200,000 and the construction going to begin in January and you ask for deposit, they give you a $20,000 deposit. That is not your income, even though you received it. That is your liability. So that is what I mean by unearned revenue. Think about your income. Make what is your unearned revenue. So not late, you can deduct that out and give your tax preparer the right money you made, you earned. Don't give them the money you didn't earn, right? Income deferral. So there are you can push it out. Don't pay taxes in 2023, push it out to 2024. Situation like if you're on cash method and you receive the check from your client, if this client is reliable, you don't want to hold on to their check, then they want bankruptcy, right? And if they're reliable, sitting right now and in December, deposit them in January. So you will get that. But if you are in a crew, already received it, and you should accrue that income in your account. But if in cash method, you can do that, right? So the cash method accounting folks may say that, oh, Ying, what happened? But he didn't finish the work yet, and I need to pay 15,000. I have some touch up he didn't do, but of course I'm already using it. So what should I do? Buy a cashier's check, buy a money order, make that payable to this contractor, and then out of your bank account. So cash method, right? You already went out of your bank account. So you're holding this cashier's check. You're gonna give him as soon as he touch up everything he promised you to do. With that, you can still deduct it, and you don't have to wait until 2024 to account that as your expense. So this is where we want you to think really hard about your income. And if you feel if your brain hurts, you just don't have time to think about it, this is the time to approach your CPA, approach community CPA. Folks, that the busiest time for community CPA is not what's the big deal, right? The real busy time is actually now because there's so many tax planning, a tax thinking like this one we need to give to our client so they can think for themselves, they can make the right decision, they can make the right calculation, right? Now let's think about the expense. We talk a lot about income. Let's think about expense. So expenses for business, we know what they are, right? And the last minute purchase is always a good idea. So if you are already longing for a company car and now it is time, if you have cash, if you have money to pay taxes, you better have money to buy a vehicle for your business. So if you buy a vehicle, the vehicle can be treated with two total is called tools, equipment. The vehicle is equipment. Like taxi company, the vehicle is equipment. Okay. In the construction company, bulldozers, those kind of things, those truck with the flip back end. I don't really know what to call them. Apologize. This is where you see me speaking Chinglish because English is not my first language. If I got the secret is if I got really tired, I start losing English word, but I won't lose the Chinese word because that was the language I spoke, I was born into. So it's sort of there, but then the English word I would kind of forget. So that kind of truck is a tool. So if the vehicle you buy is a tool, then you actually can write off 80% of it in 2023. It's called the bonus depreciation. But if you buy, like if I run a law firm and I'm the lead lawyer, I buy a vehicle with a company name and my name, then it's a passenger vehicle, you can deduct it as well. And the first year, the first deduction is much greater than next few years. So you can deduct close to $20,000 in one shot in 2023. Why not? You should do the last minute purchase if you already have one, if you're already needing one, right? And you also want to make sure that you accrue expenses that you are spending in January. And when I say that, and I know you're going to just said that cash method, I cannot do that. Sure, you cannot do that. You can pay them ahead of time, can you? You can buy cashier's check, money order, and get everybody lined up, pay this, pay this, pay this, call your paid off, even though the statement is not due yet. So you can do expenses first. So that would reduce your expense, right? And of course, if you have accrual accounting, then you don't even need to do that. You just wait until January over. You look at, all of your January expenses is probably accrued expense for December. So with that said, you understand how to do expense, right? So in construction field, if you're running construction and you have what we call percentage completion method, it's not cash method, not accrue method, but percentage completion method. That's another accounting method, right? If you're a stock trader, if you're a day trader, you have mark to market accounting method. You see how accounting method is not just one, there are many, right? But for the completion method, that is to ask you, okay, if you got a $200,000 payment and you are doing construction and they want you to do completion method. So $200,000, maybe it is a 50% of payment for the $400,000 construction. But if you're complete 8%, that means your expense is 300,000. So you want to use completion method to account your gain and loss. So for this particular period, you actually have a loss, don't you? Because you only take 200,000, but your completion method shows that the expense is 300,000, so you got $100,000 loss. Then now come to 2024, you collect 200,000, but your completion only left with 100,000, so you have $100,000 profit. But the 2024, maybe you got other projects, so you will figure out the profit and loss combined, right? So that is where you should focus on your expense. So the year end time, December, November, it's a busy time for smart accountant. The bookkeepers who doesn't have this knowledge may not know this is the time to look into that. But you know now, we have CPA firms employees who are on our webinar very religiously. They listen to everything we talk about, then they use that because their company doesn't provide training, so they come over here to get training. So this is really where you will be aware as a business owner. You suddenly realize, oh yes, I have all of these things I could do. The third one about your tax structures. Tax structure is like your house. If you have a big family and you stuck yourself in the little apartment, you know how uncomfortable you are, right? So the tax structure is really meant to change with your way of growing your business. You could start from sole proprietorship and then you grow, and then your lawyer goes, well, to protect your interests, let's set up an LLC. So you did that. And then a couple years down the road, your lawyer goes, wow, LLC, you're paying too much taxes. You're paying self taxes. It's not needed. Let's switch that. Let's elect your LLC to S Corp. Then you did that. S Corp comes around and your tax accountant goes, we believe that if you make yourself a C Corp, you actually save more taxes. Then you went into a C Corp. You see how this growing process in the company doesn't mean you have to go one direction, right? You could be a C Corp, then wanting to be S for a different reason. So That just tells you that it is a business life transition. Depends on where you are, how you earn money, and what you are doing with your business. Then the structure would come differently. So right now, we have 15 days left. And what can you do with your structure? Number one, you can make a late S corporation election to move yourself out of the LLC, which either denied your losses, you can't offset your losses with your W-2, or and have too much profit and you're paying so much for Social Security Medicare, also called self-employment tax. So if you are in that boat, make a late S corporation election. When I say election, is always electing to the next January the 1st. In this case, we do a normal election for January the 1st, 2024. That is how normal election is to the future LLC. But what if you are one of those that and says, well, I want to take advantage of the saving right now, not later. Ying, I want it right now. Then that means you want a late election to retroactively effective for January the 1st, 2023. That is late election. Late election is not automatic. The normal election is automatic. Late election need special work on that, but you can do it. You can talk to your tax preparer to get that done, or you can come to community CPA to get that done. And you can also make fiscal year changes. So let's say you are in a seasonal business and in December you make the most of the money. Okay, but December is your year end right now. So if you're in retail business, you bought $150,000 worth items, you haven't even paid any yet. December sales is done. You got a whole bunch of revenue, but you have the sale, you have the item that you didn't even pay, but you sold it. So in that case, you can see that it doesn't fit for you to be in December. You really should finish your year. You should finish your year in the period that you had the longest period that you did not make money. So what does that mean? So if your profit is concentrated in November and December, so your year should start, hear me, your year should start on November 1st. So you make money, then you start to spend money. Does that make sense? By the time you come from August, year end, you already matched your expense with your income. You're already at the right place. If you still make a lot of money, you pay it because that is what your accomplishment. But the thing is, we're mismatching our income with our expense when you just close your year in December without thinking. So you may say that, well, is it easy to do fiscal year change? Yeah, you need to apply for it. So that still can be done. And right now, and so you can do, let's say if you are a business that makes money in November, December, and if November, December is almost all of the money you make, then you can immediately do a fiscal year change to make your last year ends on October. So you're going to do a short year tax return from January to October. So short year, then you will start doing the right fiscal year tax return. Very, very beneficial, folks. That is still time with 15 days left for 2023. Of course, create a new entity, create new business. For example, we have a client. He actually he runs a restaurant, but the restaurant is so successful that he has this secret recipe that is actually he inherit that recipe from his grandpa. Okay, so that recipe itself is worth a lot of money, and his restaurant, anywhere he go, he doesn't worry about where he set up the restaurant because of how good that recipe is. So he has this restaurant, made money, but he always want to pay himself for the recipe because that's really a part of a royalty fee, intellectual property, whatever you call it. So um, he actually come to us telling us that I just like to pay myself for the recipe and I don't know what I should do. So what he was doing is he's paying himself W-2. He said that these W-2 income I make, I actually don't work in the restaurant, so I don't need a W-2, but I have a W-2 because I'm paying myself for the intellectual property for my recipe. And the correct way to do that is to set up a holding company and to hold the intellectual property, then his restaurant should pay to that holding company. If you have a holding company, and if we start up a holding company right now, and we will register the holding company into the to start from right now and next year November. So whatever intellectual property royalty fee himself should come to the entity. So what did that do to him? Then he doesn't is for the intellectual property in 2023, am I right? Because it goes into the intellectual property, so it will be filing taxes next year for the amount that they receive. And then if it is a C corporation, the tax rate will be 21% plus the state rate. So that will be a different tax deal. And for 2023, he literally properly scheduled his payment so he doesn't have a tax due in 2023. I hope these are giving you a sense of understanding how the structure works. And our next slide is actually further illustrate the structure. We call it 3 dimensions of tax planning for companies. So it's like a cube. You look at the fiscal year, you look at the accounting method, you look at tax structure, and at this point of time, you cannot tell me that you don't have a way to pay your tax efficiently. If you are the guy who borrows money to pay taxes, and then you probably should take this class. This is high school level for business owners. And this is one that teaches you how to manage your books, how to guide your dollars and hold on to your dollars, pay taxes, but pay it happily. And I also have another chart I want to show you. This one actually gives you a overview of these entities. So if you look at that 1040 right here, you can tell that there is a Schedule C, and Schedule C is sole proprietorship. You can always start a business over there, but a sole proprietorship has a lot of scrutiny from IRS. IRS like to audit Schedule C. Number one, it is easy because you are little guys, and number two, the little guys are make the most mistake. That's just how the statistics says for IRS's from the IRS database. So the LLC, single member LLC, is treated like Schedule C. That's why it's inside of the 1040. But you can see that the LLC, we can elect that LLC to be S Corp, C Corp, to be a partnership. So there's a lot of ways to do it, right? To move it out of 1040 so you don't pay two taxes, self-employment tax and the income tax. And the term of double taxation that is not used for this scenario is actually about C Corp. And, it is very outdated concept. If anybody who talked to you about double taxation, and I bet you that person must be like 60 or over years old. Their knowledge is old. They don't really, they don't take new things coming in, and they still use the word of double taxation. As soon as I hear that, my client should never talk about double taxation because we understand that you should never be the one paying that. But it is a concept from old time, and hopefully you don't struggle with that concept, and because it's not relevant to you. The LLC, multi-member LLC, right here on the top, On your left is a partnership. You can elect that to be S Corp, C Corp. You see, you can do the election, change it. S Corp, you can revert that back to C Corp. You don't have to stay as an S Corp. You can convert yourself back to C Corp. But S Corp is always coming from C Corp. So you first to be a C Corp, then you can become an S Corp. That's an election you can do. Of course, you can elect yourself to be S Corp from LLC. The process is LLC will be C Corp, elect to be C Corp first, then S Corp the second, right? And here is a C Corp on the bottom. The C Corp on the bottom, you can see it can be elected to be S Corp. The C Corp has nothing to do with the corporation above. It is only possible to pay W-2 to the owner or to pay 1099 dividend to the shareholder. C Corp is self-retained. It is a independent corporation. It's called closed-out corporation. Okay, the nonprofit as well. Yes, you can set up your own nonprofit. You don't have to donate everything to United Way. I mean, they're good, but you can have your own purpose for nonprofit. And for example, and community CPA, we actually initiated a nonprofit in 2008 called Immigrant Entrepreneur Summit. So that is a nonprofit we and the two other entrepreneurs together put together. Now it's become a nonprofit for 16 years already. So it is a nonprofit we do to educate immigrant business owners. We want our immigrant business owners, whether you have social security number or IT number, it doesn't really matter. And we want you to come into Immigrant Entrepreneur Summit to learn the proper way to do business. When I say the proper way, I mean you don't hide your cash income. You don't run around the block and just doing the wrong thing. You already know it is wrong, but you felt like you have to. That is when you really need help from firms like Community CPA because we understand how IT works. In fact, our firm is the certified agent certified acceptance agent, CAA. We are a certified acceptance agent for IT number applications. So you can come to our firm to get that done. And those are things, for that reason, we're very familiar with ITs. We're very familiar with foreign companies and taxes, foreigner. In fact, the very original firm is actually for international tax side of consultation. Those are days like back in 1998. Before that, and I'm actually I have clients, a specific couple of clients are Canadians but resides in US with business both in US and Canada. So I actually was very familiar with European end of taxes and know how to work the foreign tax credit, tax treaty. That's kind of where we come from. So with that said, we understand IT really well. And you want to know that when you have IT, those structures maybe not fit you. And some structures will specifically fit you. So that's why you need a professional help for these kind of information. And I want to give you examples after now you see the map, right? And I want to give you a couple of best practice for what kind of structures is good for what kind of business. So let's take a look. Real estate developer. And what kind of structure is best for them? So it is better to have an LLC, okay, structure to hold titles, their real estate titles, and S corp structure to be a management company, and a C corp to handle construction and flips and things like that. So that's the best structure for real estate developers. And what about retailers and the restaurants? Retailers are grocery stores, restaurants, and people who deal with customer who walking into your store, right? Your location. And the C Corp on the street, running with fiscal year end. You see, this is the best practice. Fiscal year end means it's not December. It is something else. C Corp means that the company is individually held and is not related. The risk level, the C Corp is not related to the personal, but can pay W-2 over, can do 1099 over. Okay. So why you don't want a relationship? Because if I have an S Corp and I'm running a restaurant with $1 million profit running in there, if it goes to 1040, my tax rate probably gonna be 40% total. But if I run in C Corp, it will stay at 30. So why do I want to pay 10% more taxes? Right? This is why very wealthy people, very wealthy companies, they're all C Corp. Why are they not LLC? Because it's paying too much personal taxes. We only have two tax tables, right? We have personal tax tables that deal with 1040 S corporation LLC. But we also have corporation tax tables that deal with C Corp. And we also have nonprofit that don't need a tax table because they don't pay taxes, right? And now, professional service company, what is the best for them? S corporation. S corporation with a holding company for office buildings. If you are a practitioner, if you're a lawyer doing a law practice, do a S corporation for your law practice. And for all the money you have, if you make too much money, you're just gonna buy office building, pay rent. Pay rent to your holding company that holds the office building. All right. So these are just very common best practice of effective tax structure. So you may say that, oh, maybe too late. We only have 15 days. No, you can set that up. You can set up the company and year 2023 activities into company. You have heard of sometimes there's what we call organizational fees or startup charges, things that before you set up a company, you already start working. So those expenses are accounted differently than when you set up, but you can definitely set it up now. And especially if you are doing a fiscal year, you start on December, it doesn't really matter, right? You don't pay taxes until November next year. So if you set up right now, you have it. So it's not late. We talked about calendar year versus fiscal year. This is really just kind of surrounded with the fiscal year need. If your business makes a lot of money in December, you really should not be a calendar year company because you are just asking to pay more taxes. Maybe paying more taxes make you feel happy, then do that. But if it is paying more taxes make you stressed out because you don't have it, then it is time to think about your years. Are you really a calendar year company? Okay. Okay, fiscal year. Then what are seasonal business like can be a fiscal year company? I have a couple of examples right here: food truck, outdoor adventure business, personal trainer, lawn care, Christmas tree lighting, and the chimney. Who does chimney anymore, right? Like everybody was using electric fire, you know. Actually, I have a really old chimney at home and I haven't really done sweeping for a long time. Maybe I should do. Who knows how many raccoons are in there? And I don't mind the little raccoons because they are kind of cleaning your garbage up. And the specialty retailers. So, these are seasonal business you can consider. You may be wondering that, okay, if I'm an S corporation, how easy am I to go for seasonal, you can still go for seasonal. There's a requirement of IRS that you need to know. So, one of the requirement that you need to understand is they want to make sure that two of your months, so your November and December income, that need to be more than 25% of your whole year income. Then you actually can set up a fiscal year, uh, set up a fiscal year as corporation and with IRS approval. So you need to apply for that. But it gives you so much benefit, ladies and gentlemen. Let me tell you what benefit that is. If you are S corporation, your company ends on October and you issue K1 in October, am I right? Right? So when you do your 1040, let's say you issue your K1 for October 2023. So when you file your 1040, you don't struggle with the K1 anymore because it's already done. Not like the K1 come out on March 15, you need to file April 15. It's so short of time, right? But in this case, you already have one for many months. So you actually can plan your taxes on December 31st, 2023, because you already know your K1. Got it? Huge benefit. It's a very well kept secret because nobody bothered to talk about it. I talk about it because we're frugal and we want to do the right thing, but we also want to save taxes. Accounting method, that is just really important. And if you want to be tax efficient and you're saying that you don't need accounting, you are dreaming can only be done with good accounting. This is why a lot of times when we are doing taxes for the businesses, if they have their internal accounting department, we actually would take their financial statement, we do our own review before we do taxes because it's so much different. Sometimes the accounting folks are not realizing certain things are treated differently in taxes. So they are not using tax ways to do your accounting. You can have a financial statement that is a gap based, but here your tax return doesn't match to your financial statement because it's tax based. So have you ever heard of the bankers say things like, oh, why is your financial statement? Oh yeah, why? Because financial statement was done gap based and the tax return was done tax based. So they are very different. Okay. So with that said, accounting is important. Make sure that you do good accounting. Then I can do good taxes for you. And a lot of time we just ended up taking the client who only do tax with us with so many struggles and we'll just say that let us handle your accounting because that will hit home because we do your accounting, then we can get your taxes done very well. And I would not say that I will get you not to pay taxes because if we do good accounting and tax for you and you also pay taxes, that just means how successful you are. And after all, the taxes you pay probably means the success you have. But of course, some of those taxes probably should not be paid because you are not really working on efficiency. And, how many people can be like President Donald Trump and to not pay taxes, but also on the Forbes list? And that is the very reason why a person would get into problem. Okay. So really paying taxes, no problem. We like to pay taxes, but we want to pay what exactly we should pay. We don't need to pay tips to government. They really don't want our tips. All right. With that said, I want to ask my folks, do you have any other thought related to tax saving, last minute tax saving? And we have been knocking into tax saving talk the whole time. And this last month's couple of webinars, and I talk about different things. one of the webinar I was talking about deferring income via retirement account. And I did a detailed explanation of how you should do. So if you go to my YouTube channel and you just type into retirement account, retirement tax planning, you will find my videos. And on the, I want to show you, I want to bring you back that video. Just give me a second. So on here, on our video stock, and if you come to live, this button, it has all the webinars that was done on YouTube live stream. So we have like two places you find our video. One is home right here. This is more like today. I'm doing it on via Zoom to stream it out. And then when I do it on YouTube channel, which most likely when I am in our Des Moines office, because we have a studio there, so I actually do it there. And when I do it there is under here. Are not in the home. Technically, I really don't know, but I want you to know that if you do search and you will find it. So like this particular one right here, tax strategy, tax deferral IRAs. I want you to watch this one because it tells you the 401ks in that family, what you can do, and it's still not late. You still have 15 days to do it. So make sure you hurry up, and every dollars you pay, and you want to make sure that you pay it happily. When you did all these planning things, and I tell you, my clients, they pay taxes happily. And we don't have clients who need to borrow money to pay taxes unless they came to us with a lot of baggages from the past. And in fact, I just cleared one client's tax liability from 2016. And the auditor called, goes, Ying, the case closed, and now you are done with this client's file. I'm like, amazing. 16, that's sometimes ago, but we finished it. So unless you come with baggages, we probably do need you to come up with the money to pay what you didn't pay. But going forward, and our philosophy is we pay taxes, we pay it right. And I will see you again another Saturday, next Saturday. I hope you have a great holiday season. Don't forget us. You can still reach us. And we actually open on Saturdays. So if you like to talk to us about your tax planning, and call our company, ask for Catherine or Dan. Two of them are our experts to bring you in to our system. And then, we have so many partners. Even if I am busy, you have other people. And of course, I work really hard. So I meet people anytime you want to meet. And it is not about money, it is really about spreading our knowledge, so you do the right thing. Okay, I'll talk to you again next webinar. Bye bye.